Well, I appreciate the chance to speak with you. Dan O'Brien, ag economist with KSU. We are talking about the grain markets this morning. And so I've had this nice presentation all laid out, thinking, oh, whatever happened in the stock report, you know, that wouldn't shake up anything. Well, driving in this morning and saw 11:05, my gosh, markets are jumping and things are kind of changing. So the nice buttoned down, very organized presentation that we had, well, it's still there to look at, but we're going to try to be relevant to what's going on right now in the market. So there we go. We did have this morning at 11 USDA stocks and small grain summary reports, and there were some surprises. In essence, the corn and soybean numbers came in markedly lower than had been anticipated. If you look at the futures in a minute, at least as of a few minutes ago, they jumped. So a fair change has occurred in the market. So let's dig into the details and see what the relevance is to people in the ag lending and ag production industry. So when you look at the quarterly stocks numbers, what you see is that the USDA came in with a number just under 2 billion bushels for quarterly stocks as of September 1st, for corn, for soybeans 523 million, and for wheat 2.159 billion, basically, for the adjust your decimal point. And you can see these numbers were sharply below what had been anticipated. They were even below the lower end of what anybody thought could happen. So when you get a deal like that, then you get a positive response in the market. You quoted say surprise, and it looks like, so just offhand quickly, without having a chance to really crunch the background of the numbers. For me, when I come in and look at where that might take stocks, I'm going to say, well, at first blush, 250 million bushels less, quarter of a billion bushels. Where would that take the supply and demand balance sheets? And so, we do a pretty good job, we have pretty good data estimating everything except feed use. So we know what the ethanol plants are using. We track exports pretty well, like corn millers. We know what they're kind of up to. Seed, a few things on the fringe. We have a pretty fair estimate on, but basically 250 million, and I'm assuming most of that came with a little better feed usage than we had thought. That has ramifications for the livestock outlet as well. So that was for corn, and then for soybeans, 523 million as of September 1. And again, September 1 is the beginning of the marketing year for corn and for soybeans. So it's a quote important number. When we get here on October, I can't remember if it's the 10th or the 11th, next Wall Street report, they'll probably see these. They may find more information, do some adjustments, but these are probably the ending stocks numbers for that year. And it's below 2 billion bushels. How long have you been wondering about when we get below 2 billion bushels so September 1, below 2 billion bushels. And for soybeans, 523 million. The expectation coming in was about 575, so about 50 million bushels less for soybeans. And the low end of the average trade gas was 559. So you're markedly, tangibly below that figure as well. So again, you've got support from tighter than anticipated supplies, stocks to use for both corn and beans coming out of this. For wheat, kind of more of a mixed bag. Might think more neutral, a little bit lower quarterly stocks than had been thought, but the very low end of that was there. You had some people with dramatically different ideas. I think this is almost a dare that somebody put down. Anyway, so pretty much unchanged there. There is some information in this report that came out regarding that would affect the wheat markets. And again, here's wheat production as an estimate as of September 30th. And again, we were expecting just a little bit more than that, still within the range. Winter wheat at 1.7, so again, about 24 million bushels less. For hard red, 659 million bushels, and the average guess was 692. The low end of the range was 684. So the hard red number, and what we grow here in Kansas for lenders out to the west, is that's a positive number. You're scared to say bullish, but it's a really positive number. It's a markedly lower production than we had thought. Soft red, not as many bushels in play, excuse me, but again, also lower, and you can see some other things moving around elsewhere. So these were the closes yesterday in the markets, and so all this has changed. And again, markets, and before the report came out, we're sort of anticipating just so in terms of any changes that would come, and for corn, for soybeans, for wheat. And before we jump, look at today's prices, or at least what they were about 20 minutes ago. These ratios have some importance. Futures to cash price ratio, September 29th, yesterday. Look at the current November beans versus D's corn. Of course, we're not making planting decisions directly based off of that. We're looking at this. When we turn our attention towards planting decisions, we'll be looking at November 2021 soybeans and D's 2021 soybeans. We put the ratio of those one to another. The current ratio, 2.72, really favors soybeans. Of course, crop's been planted. We're just trying to figure out how much we're going to get out of the field. The issue for next year, what should people go off into the spring and figure out what to plant? They'll be paying attention. If this is at least a barometer of what they're paying attention to, will be this new crop ratio, which is about 2.47. Generally, neutrality is somewhere around, is thought to be in sort of an ad hoc manner, about 2.4 or something like that. So a little bit favoring soybeans. What might work against this is that, gee whiz, when people have seen the price we've had on beans versus corn, probably anticipating that you may get some pretty hefty plantings, at least in South America, if not here, of soybeans next year. And you'd wonder where that would take us next fall. So out of Garden City, a place where they actually will feed wheat, our hard red price in Garden, for hard red, 446, corn price, 375. That was before today's jump. We probably take the same basis and just move higher. Ratio of wheat to corn, almost 1.2. So we're not, with that type of a price situation, we're probably not feeding a lot of wheat. Generally, you get something below 1.4, 1.04, 1.05, or even would be at least a kind of a market barometer of the economics of wheat feeding coming into play. And then for grain sorghum versus corn out there, 432 per bushel versus 375. And really, unless someone really has a great place for sorghum in their ration, it really works for them, we're paying more attention to exporting sorghum than we are right now to feeding, given that price difference. So here's what had happened. Again, so let's see, 364 for East corn, 993 for November beans yesterday, 476 for wheat, and then a bit ago, after all that, East corn now 381. So I'm gonna hop back and forth here so I remember. Okay, 364, so up, there it is, up 16.75 cents for East corn. For new crop D's, 395.25, and up 12. For soybeans, up 36.25. If you take soybeans with the strong export demand we've got going right now, and say, gosh, you got 50 million bushels less than you thought you had, well, the market responds. New crop, 973, up 26, so 36 to 26. Hard red is in the act, 514, up 38 cents. July new crop up 33.5. One thing that from talking at these in the past with a fair number of people, well, crop insurance being a big issue, it's good to take when you put up these sets of prices. It's good, I think, to look and see where the crop insurance projected and the harvest prices are at. So for hard red winter wheat, we were just tracking this July 21 contract through this month of September, as to determine the planting price. That just, you go on there onto that site, right? Well, basically 2 hours ago, $4.90 as a planting price for the 2021 hard red winter wheat crop. $4.90, and of course we run through here, and if the market stayed up higher, if $4.90 price, and already if you stayed here, you'd be that price would be 44 cents low. But there's a lot of shopping to do before we can say that's where it's going to end. but yeah, that's where it is today. And for corn, so we're looking at the projected price for 2020 for corn when we planted was $3.88. That'd be these 20, and with all we've been up and down, we're at $3.81 now, and that's after a rally. So that $3.88 planting price still pretty good price. And really the thing to watch, so we'll be watching these 21 futures. I think it's during the month of February, isn't it, when we do that, when we figure out that average price. So that's not far from $4. And your people, when they make their planning decisions this winter, they'll be, that's what they'll watch. A good part of what they'll watch. For beans, we had the planting price last spring, last February, March, I think, February was $9.17, and here with that, you're over $1 higher than that. And with the export demand we've had and all that's been going on, the demand pull, that's just where we found ourselves. The floods in China had a lot to do with all of that. So if things don't change, it looks like that planting price is going to be outhorsed by the harvest price, given where you look at right now, if nothing changed. And 973 November, we'll be watching that again here in late winter as at least an initial signal for where we might go. For the again, we just finished up 490. We talked about this planting price for, well, we'll be watching this, and I think we get into June, I believe, is when that Jenny. So here is Jenny in the room.
She went home.
Oh, right. Anyway, so I'm into some of her interest areas. I need to clean up my details. Point is that if 490 is the planting price, with this rally, you jumped 43 cents over that. So interesting times for your crop revenue products that would have an impact. Yes. Thank you. Okay. 490. Yep. Yeah. 490 is the price. So where do we go from there? It's probably a thing. Okay. Well, and in your handout you have a bunch of slides, and I thought in the time that we have, I would try to bring things a little closer together and just look at these crops, crop by crop. So if you look at corn, anticipated production, latest number we had 14.9 billion bushels, and up 9% from last year. Ending stocks in the September 11th report, 2.53. That was a fair amount. And the issue that was holding the corn market down was, gosh, that's way over 2 billion bushels. Well, if you didn't change anything in that supply, in that WASDE report, and just made the 250 million bushel change that they made this morning, Well, then you just take that down to about 2.50 billion bushels. Stocks number last they had was 17.1 in that September report. That number taken off, you drop that to 15. The price 350 was the latest projection that it jumped 40 cents in the last from August to September. Still below last year, and really you're still out here above 2 million bushels, so you get some response, but it's not like you're crunching down to stocks used so tight that you'd have to get brooms out to sweep out the victims. You still have a lot of corn around, but things are tighter. For beans, I should say if you look at that presentation, I've got some scenarios, particularly to look at. Well, what if this is closer to 14.5, and that we haven't really figured out yet what the damage is that happened in Iowa and these dry areas come about, and that's a probability estimate. Chances are USDA is right, but I don't want to just blindly say there's no likelihood of something else happening. It takes adjustments like, again, you're down to 14.5, 14.6 billion bushels, strong exports keeping up, usage coming into play to work this thing up to $394. So that's kind of where you're at. Right now, it looks like USDA will have to raise that number some, and that's just based on the usage. What happens if they overestimated that? Then you start to get closer to, again, $394. For beans, 4.3 billion bushels, up 21% from last year. Ending stocks figure, 460 million. If you take that 50 million off that we saw this morning down to 410 million, 10% stocks to use, it was almost 15 last year. And so this strong exports coming in, driving a lot of what's going on with so down to 10.4. You take that 50 million off, you're down to 9.1. USDA had a big jump in their prices in that September report to 9.25 per bushel, up from 8.55 a year ago, basically 70 cents. You're getting close to 10%. If you get below 10%, you get to 9%, get to 8%. You're starting to get into worry area, for grain markets. So you're looking at this to 50 million based off historic responses, probably about a 45, 50 cent adjustment. Now here I've got the wheat numbers, and again, not a lot of change there. In essence, the thing you notice on wheat is, yeah, we're concerned about hard red, etc. But no matter what you do, we're looking at 40s for ending stocks to use, as opposed to 10 and 17. So wheat's a commodity; it's a food commodity. We grow a lot of and we store it. We have a lot of wheat on hand. When the markets have really jumped, you're getting this number gets down into the 30s. But we're just sensitive to the domestic uses we have for wheat. With that, for grain, excuse me, I need to go back on this. For soybeans, if the soybean production number comes in any tangible reduction in usage with the strong demand that we have, much less what we found here today, then it doesn't take much for this to start getting down to 6-7%. And when we saw beans in the teens, we were at basically 4 to 5%. So there's the potential for a fair amount of price volatility on soybeans. A lot of uncertainty. The more challenges that China has in fulfilling their domestic needs, and that they keep coming to the market, crowding out others, and others saying, hey, we don't want to be crowded out, then you end up with stronger prices. So there seems to be a fair amount of potential for what's occurring for soybeans. And for wheat, one issue coming in internationally is the factor for the last several rallies that really took us higher in the wheat market, dryness over in the Black Sea region. They've got some
Report this morning they're down 9% in Ukraine for their wheat seedlings from Russia. If you just look at the map, it's drier than quote all get out over there. So not trying to stoke the fires of market optimism, but there are concerns about the world supply of wheat. And for sorghum, so here we're at 358 million as a production number, up 5%. Ending stocks 23 million bushels. Stocks to use 6%, was 9.5 last year. Price 350, equal with corn. And if anything, what you saw the price in Garden City for corn versus soybeans, you wonder if at least in Kansas, we're not equal with corn for beans. We're above that. So this is an export-driven thing, and 23 million bushels is when you get your brooms out and scoop around the edge of the bin because there's something happening. So this is whatever we're producing right now. There's an opening to go to China, and yes, I see 350, but they that number probably go higher. And our look on the ground, we're a lot higher for grain sorghum. For cotton, not everybody in Kansas grows cotton, but we have at least 4 gens across that southern tier: Winfield, Anthony, Collison right outside Pratt, and over by Moscow, Newton. And we're doing meetings down there to work with them on cost of production and all sorts of issues. And it has its risks, but what I found in looking at cotton is that we're going to talk about cotton. You need to get the cooperatives from down in Oklahoma and Texas to come up that really understand those loan rates, those quality premiums and discounts. There's lots of positive to consider for cotton, particularly in our water challenged areas, and we do have some down there. Again, for 6-7 inches of water, you can grow all the cotton that you want. And then, but you can't just. But you have to remember, it's based. Anybody here really into cotton? Work with a lot of cotton. Okay, what I'm about to say, just forget what I'm about to say. I was told by the gym people, it's basically a tree, and you have to kill it. Because if it gets rank growth, then all the energy goes into the stems. So it grows so high that you put regulators on, keep it down like that, and put this energy into the cotton. That's a fair statement. Yeah. And it costs a lot of money to do that too. So, but yet it gives people with limited irrigation or dry land a really good crop option. And wheat's having a hard time competing with it. So there, I got by saying that, and nobody's charged yet. Just put this up here. Just I can see now it's too small. This basically is the Dow Jones Industrial Average. I believe that's a definition of volatility. This is the U.S. dollar had gone down and come back up, helping our exports at the lower level. Price of oil down, come back up. Price of gasoline down, come back up. So, we're operating within, these ag markets operate within the realm of the overall financial and commodity markets. What's happening in particularly currencies is a big deal, and all that goes on here is affecting ethanol. Okay. We'll try to move quicker here through some things now. Latest U.S. drought monitor that I had available yesterday shows current situation in terms of this dry area in Iowa that's coming to play. Some dry areas in southern Illinois, Indiana. Again, to the east, of course, we're not even talking about all this dry out to the west. Texas having their issues. Predicted soil moisture for September 29th through October the 6th for the yesterday through in the coming week, which is a little harder cut on what's dry and a little different criteria. Iowa's a pretty important place for crops, and it's been pretty dry. Nebraska, dry almost everywhere. Parts of Kansas dry, east and west. Indiana has problems. Ohio, up in these other areas as well. So we have these reports coming on for the size of the U.S. crop, and it's not monolithically determined that what the USDA said is going to happen. There's still crop production risk in the October, November, and January reports. And there's about seven or 8 points I want to make, and then I have a bunch of other slides, but we'll go to them based on what you'd like to discuss. So you've had ups and downs in U.S.-China trade relations. Phase 1 trade agreement fulfillment, a strong U.S. soybean and sorghum exports to China, and that coming into some other crops as well. I'm talking with Alan. I think, Alan, you're going to talk about this some in your presentation. Chinese crop and livestock production problems. They are the definition of excess flooding. We were worried that the Three Gorges Dam, I think at the Yangtze River, that there was a time about 45 days ago we thought that thing might break. They were getting that much moisture, and then that didn't break. So big sigh of relief, and then suddenly a hurricane comes up. Well, and that first floods it kind of hit the rice areas. And this other hurricane came up right up through into the North China Plain, right straight up into it. So they're probably feeling persecuted at the moment. So you've got flooding, excess rainfall, major storms in recent months affected their production. There's still this ongoing question of recovery of their swine industry. The recent African swine get my flus and fevers mixed up. Basically, that the disease that hit their swine industry, and these ongoing issues of risks, U.S. and China geopolitical tensions that you would think could come in and affect things. If China didn't have all these needs, I wonder where this would be. They have such needs right now to import things, and there aren't many suppliers to give them the quantities that they want. We get along pretty well right now, probably because they have such needs. Soybean exports, then the prime driver, the first thing we noticed, the first impact, that we've had strong soybean exports. We're 3 out of 52 weeks into this marketing year, starting September the 1st, about just under 6%. You have shipments of about 130 million bushel that happened at least through the 17th. There's a new report out this morning I don't have on there yet, but 130 million bushels of shipments, 64% of them in China. The forward sales, what's projected, 624 million of 2.125 billion, and over half of that to China. So we need a pace of about 41 million bushels over the remaining 49 weeks to get what the USDA is projected. And or one way to look at it, again, since we have basically a 6-month season, i.e. until we still get their crop. So on average, with USDA's forecast, we need probably about double that. And so that's kind of a metric to watch. Here you can see the pace in the red, 2020-21, on the high end of where we have started years. You can see these different marketing years. 2012, that was the drought year. When the drought came in, we leveled off, high prices. But again, you can see the strength of years that we've had and where we're at right now. So we're starting. Soybean imports, what had happened with China, they were so strong from 2010 through about 2016, 17, and then leveled off. And now because of need, they've come back in, but not at the same dynamic growth. Other people are buying European Union, Southeast Asia, Mexico, the rest of the world up at a pretty fair pace. But point is that the growth in China had stalled, but now, at least temporarily because of their needs, has jumped jump to near the pace that we've had. Sorghum exports, again, just starting this year, 7 million bushels of the 260 the USDA is projected, almost all of that to China. What they purchased ahead, 63% of 102 million bushels of this, again, 63% of that goes to China, and you can see the pace we need. So here's this year we just finished up, 2019-20. Really, until the latter part of this, we were just sort of doggish, not moving very well. But then we picked up our weekly pace pretty strongly, and now we're coming into this and have high hopes. Corn exports, again, 3 weeks in, shipments, 79 million bushels, 24% of that to China. Forward sales, 45% to China. So to me, this is a surprise that they're coming in strong on corn with those. China is now involved in the U.S. corn export market, and at times they've been sort of in and out. And you can see the pace that we're at. There's that drought year is kind of the bottom line. On the low end, you can see where we've been in here of late. So starting off decent. Corn ethanol production is a big issue. And our 5th point, the pace we were chugging along at before shutdowns for COVID-19 hit, we dropped. We come back to about 87, 88% of that. So ethanol use projected by the USDA 5.1 billion. Using our own internal numbers, it looks like it's more like that's a little bit behind that, 4.85. And you can see that drop. So here's the weekly ethanol production in terms of barrels. That's 1,000 barrels. Again, so 5 million barrels. This is the pace that they weekly ethanol production. So you can see the drop that happened with COVID-19. We come back somewhat, but not clear to where we were in terms of that's the direction on the stocks. You can see we were jumping up. We got when this dropped off, stocks jumped way high, crashed the market, come back down now, and so if stocks are lower, we've seen some positive in the ethanol market. So here we got that. Ethanol plant losses. We're not making gangbusters money. We're losing about 3 cents a gallon. It's kind of where we've gotten on this. It was interesting, the 3rd week in September, if you just calculate that week, corn prices jumped to $3.50 suddenly from about $3.25, and suddenly they were losing 19 cents a gallon. So now with what we just saw, I mean, we're rejoicing. If you're a seller of corn, we're rejoicing. You're a seller of corn. But if you're an ethanol plant manager, you're thinking, my gosh, it just jumped to dime. And so that person, he or she, looks straight to what the price of ethanol is. Did that jump too? If not, then you're going to hurt the ethanol side. We'll see where this goes. And here's the chart we put together. Again, we suffered a long period all the way from June 2018 through basically March, April, with losses 10, 15, 20 cents. And have to idle some plants and had to come back up to here. We'll see where we're at. September cost, $1.35 a gallon, $1.32 price, and then a net loss. Take a look at wheat market factors. Again, that market here starts June 1. So we're 16 weeks into that, about 31%. Shipments, about just under 300 million, about 10% of that to China. Forward sales, 196 million, under 200 of the 975, about 13% to China. So China's a player in the wheat market, but not near as dominant as for soybeans, as for grain sorghum, and now developing corn. And here's the paces that we need per week to meet USDA's projections. You can see all wheat U.S. exports running at a decent pace. There have been some years better, some years not. And for hard red, if anything, relatively speaking, here's all U.S. wheat exports. So you've got some winners and losers. For hard red, we're at kind of running at the top. So that's a question. So we're probably, with less hard red, that number will probably slow down with the price of it. That you think is probably where that will work out.
Major export competitor issues. Great export production by U.S. Competitors around the world. What's anticipated? South America sees what's happening in the soybean market. Every report is that they intend to be there ahead of us and to plant a whole lot of acres. So your people that you're working with that plant soybeans, I think it's good to be aware that South America, Argentina, Brazil in particular, intends to take advantage of that situation. And they'll have a new crop before we do. So probably it'd be worth considering price protection for next fall. Corn, South America, Ukraine, up 6% in 2020. Last 5 years, up 59% for the last 5 years. We pay attention a lot attention to South America, but Ukraine has really come on as an export competitor for the U.S. So I don't know what this drought that's affecting wheat in Ukraine will do to the next year's corn crop, but you just need to be aware that there's a lot of competitors. Argentina, Brazil, politics, export taxes, and weak currencies. Whatever they grow and can send out, it's weak currency compared to the US dollar, and then it's cheap. By the time you involve cheaper, by the time you involve the currency side of it, but you hear on a weekly basis of political unrest, unions, etc. in Argentina. Brazil has their troubles as well. So Ukraine, Russia, geopolitical issues, logistics, weak currencies. It seems that most of our competitors have weak currencies. And our relatively strong currency has, I think you stand back and you look at the broader landscape, the stronger US currency does not help us as far as an ag export.
Dan, about 10 minutes.
10 minutes, thank you, Rich. US spring plantings, I think it's kind of a dynamic situation. You first need to determine what crops, where we're going to end up this fall. And short US crops don't seem to be emerging to date for this fall. We're shaving back, but we're not having a 1988 drought any place. So we'll have some decent production, but with higher prices. Soybeans, probably up strongly in the US, probably up strongly in Brazil, and they'll harvest before we do, and a lot, but that's going to be what happens between US and China. That's going to be a big thing. Corn, I'm unsure about corn. It depends how enamored we are with soybeans. A lot of what happens with corn will be on the health of ethanol and feed demand. And a report we just got indicated feed demands for sorghum. What does China want to keep buying or not? That's really where we're at on the sorghum market. So I do have other things, but do you have any questions or any thoughts? I invite your observations to see if you think I'm thinking correctly on these things or not. They used to.
Dan, could you repeat?
I don't want to because they're going to have a good answer. There's a question whether ethanol plants gain subsidies from the government. When they first started up, there certainly were state-by-state subsidies and intangible ones, etc. And the biggest subsidy they have is the renewable fuel standard, and mandating that X% of the U.S. fuel supply, gasoline supply has to include ethanol. That's different. They have been cut out of these market facilitation payments.
There's an article this morning talking about that very thing, to where they, of course, it was an ethanol industry funded study, talked about $10 billion loss, and that, and Jeff Cooper, the head of Renewable Fuels Associations, indicated that this is proof that if there's another round of assistance, we need in on it, because they weren't on the last ones. So their big help is renewable fuel standard and the opening to do D15 or D whatever. Well, you saw the losses there. They would like some help to overcome those losses. Good question. Any other thoughts? Any thoughts from online?
How big of a swing will the markets make after the election? Time to be an Old Testament prophet here.
See, 7 years of plenty. Oh, sorry, that's the wrong deal. I really can't tell that. It seems that there's this, again, it would seem that if there's, regardless of which way that election swings, that there's going to be an unrest by whichever party doesn't get on that. And that if it doesn't win the presidency, and if that causes upset and volatility in the financial markets, then that will lead over to agriculture. Alan, is that a fair statement? Good. I think that's comment that Dan, you can hang yourself. Go right ahead. Anyway, the point is that there's volatility seems almost unavoidable, and what will it do to the stock market as far as agriculture? As long as that volatility doesn't mess up logistics and such, would probably be less effective than some others.
And here's from someone that may not have been on earlier. Did you address why today the market made such a swing? If you could maybe just briefly summarize for that.
Yeah, his response to the, particularly to the surprisingly low September 1st stocks numbers for corn and for soybeans. Both were tangibly, significantly below the low end of trade expectations in the market. So that tied in with stronger exports. You're tightening supplies at the same time that you have pretty strong exports. So that combination is causing the response.